welcome to this week's Raz Report. We're excited to have Gene Munster, Managing Director of Loup Ventures, previously analyst at Piper Jaffray, Apple and Tesla Bull before anyone probably even knew how to pronounce the names, even though they're easy to pronounce. But this guy was calling this before anyone else. And we're going to be sitting here for the hour learning about Gene, his background, how he got to where he got, advice for people that are listening to, achieve the things that Gene has achieved. And then one of the things that I think will be very helpful is how does Gene analyze companies? And now he's a venture capitalist and he's investing in small cap or smaller companies, private companies. What does he look for when he's investing in these companies? Do they have to be innovative? Do they need to be profitable? That's what we want to cover in this hour. So we're going to get right to it. Welcome, Gene Munster. How are you today?
Doing great, Raz. Honored to be here. Big fan of everything that you've built and appreciate the time today. No,
appreciate it. We've been a big fan of you. I know you've been to our office a couple of times and you've been to a lot of our events. And it's crazy where this industry has come, and it's crazy seeing what you've built. We're now Benzinga. We have over like 110 team members now. It is what it is, right?
Man, so managing people is a big part of what you do, the personnel side.
Yes. That is it becomes a different animal at certain times. To go from a few people to 12 to 30 is one thing. 30 to 60 is one thing, but 60 to 110 is a whole different animal, because I used to talk to everyone all the time. And now there's people who join and it's hard. You know what I mean? Especially when they're remote.
Yeah, we have 8 people at Loup, and it is, I should cherish the fact that the team is small like it is, powerful but small, but I can see that. But I love what you've built.
Yep, totally. I mean, yes, 8 people, it just, it's different. But okay, so now people want to hear about you. So Gene, where did you grow up?
So I grew up in the suburbs of Minneapolis. I say I'm 50 years old. I'm actually 49. I've been rounding up for about the past 5 years. I just think kind of big picture, people just hold on to their age way too tight. And I've just been embracing this roundup approach. It does beg a question on this July when I turn 50, officially turned 50. Do I start referring to myself as 55, 60 perhaps? Maybe I stick with the actual 50, but that's where I grew up in the 70s in Minneapolis, outside of Minneapolis, and son of an accountant, and I've got 3 older brothers and a great mama.
Got it. Okay, so son of accountant, 3 older brothers. Are your brothers in equity analysis?
They are not. They are super geeks. Before being a geek was cool, and they work in more of the hard sciences.
All right. So that could be helpful. So what did you study in school, and where did you go to school?
So went to public high school. College, I went to a small private school in St. Paul, Minnesota, called the University of St. Thomas. Has more of a business background, has an entrepreneurship kind of angle to it. I studied entrepreneurship back in the day. And, my claim to fame is, this goes way back, as lawn mowing. I loved to mow lawns. I started a lawn mowing business when I was 13, and I ran until I was out of college. So it's at kind of your early 20s. Empire. It was just an empire. It was so much fun to build the business, and so that's I just vectored off of the fun that we had in building it was a real business. I remember this is in the 90s, the kind of earlier 90s. I think my last year in college, I made I don't like talking about the numbers, but to give you a sense, the hard decision I had to make. I was making close to 70,000, clearing about 70 grand a year, which is probably like 150 grand a year now, but that's just coming out of college. And I remember when I first got a job offer at working for Piper in their equity research, it was about a 50% pay cut. I remember having a conversation with my pops, like, is this the right call? Like, I'm taking a 50% pay cut. So anyway, that was lawn mowing is very near and dear. I still mow my lawn today. If you ever want to talk lawn mowing, any of your listeners, viewers, I love to talk lawn mowing. I'm a huge fan of mowing lawns.
Well, no, that's a crazy story. So you were mowing lawns, making 70,000 a year. Did you have a bunch of students working for you?
There's two other people okay, it was usually a team of three. In college, I had to, because I grew up in Minneapolis, St. Paul's right next to Minneapolis, so I was able to do both of them at the same time, go to school and mow. And we had just an opportunity to, sometimes the whole crew, I wasn't there. Other times I would work there. I did what probably a lot of college students do. I did the Monday, Thursday. I just kind of load up the classes Monday, Thursday, and then we'd go and rock and roll on the other days of the week.
That's unbelievable. So then when you decide to go to Piper Jaffray, did you just get rid of Empire, or what'd you do? Sell it to your buddy?
Yeah, there's fun backstory to that is that the biggest competitor, my biggest competitor was called Green Horizon, still around. And I remember a few years ago, they had like during a Super Bowl, they had some local ads. I remember that, or no, AT&T did one about data in the truck. And I was like, that's incredible. But I remember I met with the guy from AT&T. I had brought on another partner at the time to work the lawn business. And we were thinking about just selling him. And then the other person, his name's Dan, he decided just to take and run with it and renamed it. It's called Minnesota Outdoor, and still around today. A few years ago, I was driving around, I saw their trucks mowing a lawn, and I'm like, I got to stop and talk to them. So I jumped out of the car, walked up, and, it was Gene Munster circa 1988 out there. And, I just had to ask him questions. I didn't say that I had an association with Minnesota Outdoor, but it was quite rewarding to see the crew out there.
No, that's awesome. I in college, I had one of the first online textbook stores, and it was crazy.
Wow.
I had airplanes fly over Michigan Stadium and a couple others. I remember I had no money, and
marketing.
I was like, oh yeah. So I started this business. It was one of the first online textbook stores, and I needed to get the whole university to know about it, but I didn't have any money. And so, so there's a Michigan Notre Dame game coming up, and there's 106,000 people going to be there. And it was the beginning. It was before school started. So I'm like, all right, airplanes over the stadium. So when they did that, and then get signs on your way when you walk up to the stadium, have signs everywhere to like get your name so that they see it more than once. So I went to Kinko's. The guy at Kinko's let me pay $10 for like what should have cost $200. And then I went to Home Depot, got 2x4. So at Michigan, from 3 a.m. to 6 a.m., I'm hammering stuff. The day before on Friday, I call 3 airplane companies to like fly the signs, and they're all like $1,200, $1,500. I'm like, I got $250. If you want to call me back, call me back. So that was like in the morning of Friday. Each one called me back at 5 o'clock. All right, we can fit you. So I ended up doing 2 different signs. I had like 1,000 orders when I got back, and there's like 25 people that I never charged for textbooks because I had automated. But if I didn't have the book, I'd go to the publisher, and I was never good at doing the manual stuff. So I just let those guys have free books, but whatever. And so that was like you said.
Let me get this straight. Notre Dame, Michigan football game. They've got those planes flying over, like you see flying over the beach.
Yep.
Pulling a sign.
That's right.
It says Raz Books.
Yeah. It was College Book Zone, and I paid $250 for it, and it generated like so many orders. I was really big into grill marketing back in the day. And that was
I mean, it's that's part of the game today, I'm sure.
Yeah, and then actually my textbook business, which didn't have high margins. I'm like, what would kids pay for guys in college that you don't have to ship a physical good? And that is meeting a girl, online dating. So before you ever heard of all these dating sites, and I made most of my money in online dating, investing in the stock market of these online dating companies in year 2002. So I morphed into online dating. And the way I did that was I had people putting like on the windshields of cars, outside bars or inside bars. So on a Saturday night, you're going home alone, you're on Motor City Singles or pickysingles.com was the main site. And I had like every ethnicity and city, the domains, and it like worked, but it was all guerrilla marketing.
That's incredible. Didn't know that.
Yeah, I know. I didn't stay with it, and I should have, because this is way before all the ones like Plenty of Fish. I was way early, and I just what I've learned, kids that are 21 to 24, they like to start things and don't necessarily follow through. I was in that game. I started the things and I got them to a little bit of scale and there was success. And then I was like, on to the next thing. That was like, you know, and the interview is about you, but was my problem, 22 to 24. I should have stayed in the online game, but I wanted a cell phone. This is where we're going to go to Apple. I wanted a cell phone back then that would open my hotel room door or pay for things. So I went to the wireless CTA technology conference, the CDMA. I thought when I was 23 years old, I was going to create a cell phone to pay for my bill at a restaurant. Okay. So I should have kept with the online game, sold it for 20 million and then done the cell phone 10 years later. But you know, this was my whatever.
Well, there's a learning there. You talk about sticking with it and just having a good sense about where the future is going to be. I mean, you had that. Obviously, you've been wildly successful, so there's no need to, you know, second guess anything that happened. I realize we're not doing that, but no need to do that. But that's, I think, just a good takeaway too. Is like transformation takes time.
That's a good point. All right, so now back to that's a good point. So you out of college, you got a job at Piper Jaffray, is that correct?
Yeah, it took me a little bit to actually land it, but
when you say it took you a little bit, was it like what do you mean by that?
Well, I guess I graduated in May and I started at Piper a year later, and I started interviewing with them kind of in the fall, and it was just a matter of, I mean, they were super supportive, and you know, everybody's got a great story about kind of walking through walls to get the first quote job, and I think mine probably fits a lot of those, but I think the bottom line is somebody took a chance on me, and I'm really grateful for that.
Yeah, no, I mean that's what you need in the beginning. So someone took a chance on you, and is it like you wrote a letter, you applied like your resume like normally, or like how did you get to Piper Jaffray? Do you remember that?
Oh, I very much remember it. I was mowing the lawn. I was doing a fall cleanup. As I mentioned, it was the fall when I made the first contact, and a guy by the name of Brooks O'Neill, who was an analyst at Piper covering the medtech space, was his yard who I was working on, and he stopped me on the way out because usually sometimes you talk to the homeowners, sometimes you don't. He stopped me on the way out and said, well, you know, what are you doing? What are you doing with your life? And just said, you know, this is kind of the idea. I love businesses. I love how the mechanics of how they work, and don't want to be mowing lawns my whole life. And nothing wrong with that, but it just wasn't. There's actually an insight that I had around why it's hard to scale a lawn mowing business, and it's the labor piece is really hard to scale. Not about the topic of our conversation, but anyways, that's how it happened. Is I got lucky with Brooks O'Neill. He was a big supporter, and then I got lucky with just an incredible mentor. His name is Haney Nada, who hired me, took a big risk on me, and I'm forever grateful for that. I worked as his analyst for 5 years.
Wow. Okay. So that's amazing. That's not, now we're getting into it. So you start out there at Piper Jaffray. How many years were you there for?
There a long time. I was there 20 years.
Okay.
Yeah, 20 years, 21 years maybe.
Were you always drawn towards the technology side of things?
Yeah, I mean, I mentioned we got pretty high geek factor in the Munster household, and so was lucky. My pops is an accountant. We had super fortunate to have actually a Mac when they first came out, and so we were always horsing. My brothers and I were always horsing around with that. I was the guy who do not have hand-eye coordination, so like golf, baseball, it's not for Gene Munster. And so, but I grew up in a neighborhood where there was 100+ kids in the immediate vicinity. So like baseball games were big. I remember I'd take stats for baseball games and then go and put it into the computer as like a database to see batting averages for different people and things like that. Ted Emmer, by the way, had the best batting average back there on Aaron Terrace. And so, but yeah, I was always kind of a geek at heart, and it was just really fortunate to find something where that curiosity and that geek factor could really have some fun at Piper. Great people at Piper. Love the organization.
So you were there in the early 2000s, like the .com craze?
Yep, solid.com. And that's really how I got my big break, I guess, is that, as I mentioned, most grateful for being a junior analyst for 5 years with Haney. And then, you know, just so many companies were coming public that they needed more analysts, and I had scored well with the buy-side investors that I had talked to and the sales force when they're trying to think about adding other analysts to cover some of these new IPOs. And actually covered some of the, Haney went and did all the internet, and I covered a lot of the legacy tech software and digital authoring tools like Adobe, Autodesk.
Okay, so Adobe, Autodesk, you were covering those back then. Okay, so then I'm going to go back to your life, but when you said Adobe, Autodesk, the one that from your newsletter you talk about that's like an Adobe Autodesk is Unity, right? Unity is the back end for game.
Yeah.
Are those similar type stories?
Similar stories. I am a shareholder. Loup was an investor in the initial around a couple years ago. But yeah, I think there's a lot of similarities between what Unity is doing in Autodesk, Adobe and Autodesk is doing. And the bottom line is what really made Adobe special is the ability to recognize that, I mean, it just sounds so obvious now, but digital authoring tools were going to impact how we see the world. And I think that, that's essentially what Unity is they're kind of the next generation of these authoring tools for VR and AR and gaming. Got it.
Now, the short term, like Unity sold off a little bit last week on earnings. Any opinion on that?
Yeah, it was a rough day. It's down 15%. Part of the reason was that this Facebook, or not Facebook, but Apple's changed how they're allowing advertisers to advertise and making it a little bit more difficult for Unity to essentially get customers, and that's a negative 3% headwind. When you're a growth company and the stock had done well since its IPO, and you talk about a 3% headwind, even though you maintain the numbers relative to the street, when you're in growth mode, you got to be beating and raising, as we know. And the stock takes a reaction, and it's probably going to be under pressure for a little bit. I'm still holding on to my shares. I believe in this.
Yeah, no, it's a story like, I mean, when you were buying Adobe, by the way, people buying Adobe, it wasn't straight up. I remember when Adobe switched to a SaaS type thing and the stock wasn't straight up. People, do you remember that?
Oh yeah. I mean, it was the end.
Yes.
It was the end. Yep. And now
I had on the major networks. This is before I was like really like into this, and it was the end. And if you bought Adobe, then you're probably up 2,000% is my guess.
Yeah, done well. I didn't know you're vectored in. I mean, our orbits were more closely aligned than I realized, Raz.
Well, I wasn't out there doing the analysis. I'm just the one on the sideline was paying attention. The thing that I like, Gene, is the thing behind the thing. So I'm always like looking at what powers things like Twilio or HubSpot. I like the thing behind the thing. And then I read your newsletter religiously.
Thank you.
And I do. And I have a couple newsletters pulled up. We'll get to it. But I read the Unity Gaming one, and it's one of those things I put on my radar as another thing behind the thing. And people say to me, why don't you just get the thing? And I just think when you're the thing behind the thing, it allows you to, get out there.
Never heard that before, and I love it.
Yeah, so that's a Raz original. I use it. We have like a show that I do, thing behind the thing. So, all right. So in the early .com craze, and you were at Piper, was it just insane? I mean, every day, GeoCities and all these companies are going public. Like, what were you thinking? Were you like, hey, maybe I should leave and be a CEO of like the next tech company or Business Insider? What were you thinking back then, Gene?
I was trying to comprehend what was going on. So you have, and the one that sticks out, you have to understand too, is that the internet, like Yahoo Finance didn't exist. We still use a quote system called Bridge. It was expensive. The senior analyst had Bridge. The junior analyst used a Bridge terminal. It was like a central terminal, like in the middle of a common space. So if you wanted to get a real-time quote, you just walk down and pull open the Bridge. And I remember there was a company called KTEL. And for me, that's when the light really went off. KTEL Records, as I'm sure very few people that will resonate with, but the KTEL announced that they were going to sell their records online. And there had been some big ones with like Netscape, and some other ones had kind of already gone. But and then KTEL just went up like a rocket. I mean, it was like a GameStop type of a few days. And I just remember thinking something was bigger. And then at that point, it was this rush. And yeah, it was just a really exciting time, because you start to have a sense of where this technology can go. And specifically just the concept of the internet really being transformative.
Yep, totally. And then so you were just so busy then? Like when, like, I guess at Piper, when did you become that? Well, when did you become that all-star? That's probably the wrong question. You're not going to say I became an all-star analyst. When did you first get bullish? Let's just move to this one on Apple.
Well, it happened when there was we kind of dabbled in, as I mentioned, my family was dabbling in Apple products, and Steve Jobs came back, and I think that caught some people's attention. I remember that day. He'd sold his company, I think called Next, back to Apple. Didn't take a salary, $1 a year or something like that. But whenever that was, 2003, something like that, for the holidays, I got an iPod. Pretty generous family, and I just remember trying a lot of MP3 players out before, because we were a tech team. We always played around with tech, digital cameras and MP3 players and hard disks and just different things. And so anyway, the iPod shows up. Santa brings the iPod, and I remember opening it up and just thinking, like, this is a gift that I'm really going to remember. And the problem was, of course, actually at that time we did not have a Mac. I did not own a Mac. And so what we had to do is I struck a deal with our graphics department at Piper where I could come in at night and burn the DVDs, because you had to have a Mac to use an iPod at the time. And would go in at night. Then I'd set a timer on my watch for it'd take 20 minutes to burn a disc, and I'd sleep, and then kind of back and forth. And then you realize after a couple nights of that, this is just silly. I got to buy a Mac. So I went and bought a Mac, and was just kind of talking about that whole experience with Mike Olson, who was an analyst that worked with me. And he said it's like a halo between the two. And to this day, I will stand by the term, the halo effect. I think it was coined by Mike Olson. If it wasn't coined, he's the one who really took it to the next level. But that was kind of the spirit. And we were covering software at the time, and I credit Mike Ott, who was the director of research, and we came to him and said, this isn't just going to be a computer company in the future. They're going to go in a whole different direction with a music player. We didn't see the iPhone at the time. And he saw it. And I remember him looking at the other analysts. They were all computer analysts that were covering it. And I remember saying to him, this is our opportunity to change the narrative on it. And he's like, I get it. And you're going to be a fish out of water here, but let's go for it. So that was kind of the reason how Apple came about, the inspiration behind it. And then it just kind of, we always wanted to get it right. That was the other thing. We've been positive on Apple for a long time, but every time it would go up, we just want to get it right. And there's no pride and ownership for it for us. And I just think the company has since then just continued to surprise me about ways that they're going to be becoming more important to our lives.
I mean, you didn't just get it right, though. I mean, you were beyond right. You were on everything. And I just remember you getting ridiculed sometimes. He's in La La Land. He just says Apple is going to be this, and it all eventually followed. So
nice to remember that. We can talk about the stuff I missed too, but nice to remember that. And it's been a great run. I still think its best days are ahead.
Yeah, and I remember it. I mean, it's crazy. And so you got into it when it was the iPod stuff, is what you're saying? Yeah,
the iPod. And then I think, I think we not just getting into it and seeing it too, but being committed to it. I think that was a big part of it. And we still refer to this at Loup because we still publish content, as you mentioned, as the drip. But that idea of just continually being out there has just, I think, been an important part. Just continuing to make sure people know where you stand. Some may refer to it as sticking your neck out, but making sure you're doing that and owning the mistakes and just so from a business model perspective, our view is always just keep the drip going, and probably just like any your world too. And we published a crazy amount of research. We still do today at Loup. We publish 4 things per week, which for people who are doing analysis on companies, public and private. It's a lot of, we're putting out a lot of research.
And are you doing 4 things per week just because that's what you do every week, or is it you do 2 things if there aren't more ideas? What will you do?
It averages out to 4. So that's we have a goal of publishing 4 things per week. 2 of them are video related. We have a TV channel called Loup TV, and 2 of them are print related. You know, over time we may kind of work around the margins on those, but that's the idea. Is just, you know, we want to get it right. We want to figure out where massive transformation happens, and I think part of getting it right, there's just part of our DNA is to do that. Putting it out there and making sure the world knows where you stand, I think, is an important part of it.
Yep, totally. And so I want to move on to the Apple. Did you like camp out at Apple back in the day when they would release like a new iPod or something? That kind of thing.
Feet on the street. I mean, we were all over the place. I mean, I think that was another piece that made us a distinction. I remember when I called, I had my iPod and I went and worked out at a gym, and I was looking at other people kind of fumbling around with their Sony Walkmans. There's a blast from the past. And I wanted to give a call to investor relations just to check in and see if there was anything I was missing. And I remember talking to them and just saying, like, your device is going to make people more healthy. And it just came out of my mouth. I was in the lower level of Lifetime, or at the time it was called like Northwest Fitness or something like that. And so I think that was, and so then I got on this thing like, let's start talking to people, like, will it really change our life? And so then we had spread out. We had a team of 3. We'd spread out and just talk to people. We'd walk around the streets and we'd say, you know, we'd have the device. That was a big thing, like show people an iPod and what do you think of it? And then that kind of just kept finding new ways. You know, the lines, surveying people in the lines is something we've done for a long time when Apple product releases. And, you know, over the last 5 years, we do more of those. That survey work is done through things like SurveyMonkey, but for 15 years, we just pound the street.
Got it. And so, and you just pound the street. And then how did you have enough analysts to go cover all the openings? Or you had like 15, or like you spread
self, Mike Olson, and Andrew Murphy, the 3 of us, we've somehow found a way to get it done. But, you know, it was a big part of, you know, our coverage. I bet probably a third of our time, we probably covered 20 companies, and I bet a third of the time was on Apple.
Okay. Yeah. Got it. All right. Now you say you don't sit at work.
I don't. I'm standing right now. I encourage people to at least give it a try. But yeah, it's kind of a funny backstory, if you're all right. If I kind of rip my backstory. No pun intended, but it started with a bad back, of course. And you know how your doctor, your chiropractor will say, you try standing at work. And I remember thinking, like, nothing's working here. I'm not going to go down the med route, and that's just, we're not going to do surgery. Let's just try this. And so I did it, and I was determined to do it, determined to get a standing desk. And but it was expensive, and there's a long process to get a standing desk, to get approval, because they're like $5,000 or something like that, approval to get a standing desk. And I was like, well, all I need to do is take my existing desk and just raise it up by like however far. And then I love fixing things. And I thought, I'll just go to Home Depot. I'm just going to go get some cinder blocks. And so I went to Home Depot, and I got cinder blocks, came in on the weekend. I put the cinder blocks underneath the desk, and voila. And on Monday, facilities came in and said, we can't do that. Can't do that. Like, this desk could fall over. I mean, they were right, but I was just so determined to get it. So I had to wait a little bit before then, but there was bets made in the office. I remember this, like, is it going to last for 2 days or 2 weeks? And I didn't do it. I didn't try to force through because people were betting against it. That wasn't my motivation. I just ended up immediately, the piece that I didn't realize, my back is better. It's not perfect, but it is better. The piece that I didn't realize, one of the benefits of standing is you can move around faster. Like if I want to go over here or go over there and grab something, it's just so much more efficient. And so I've really enjoyed the mobility of standing.
I hear you. I hear you. So you can type things that way too?
Yeah, I think my writing is as effective sitting as it actually feels uncomfortable for me to sit. Before the pandemic, the most sitting I would do was on an airplane.
Wow. Okay. That's interesting. I didn't know this. Maybe
Yeah.
maybe I should start
getting good details here.
No, that's quite a story. Going on with keeping the stories, we're moving to Loup Ventures a little bit. You said the phonetic alphabet is part of Loup's culture, and I want to know why. I think I may have an idea in my head why it is. Does it have to do? Well, no. You just tell me. I have a guess, but I want to hear.
So phonetic alphabet is, I call it the phonetic alphabet. I think that's what it's officially called, but this is like Alpha, Bravo, Charlie, that whole thing. And everyone at Loup is required to know the phonetic alphabet. They are rewarded handsomely for doing it. They get paid $50 to memorize it. The reason is that what I found, it's just something a little lesson in life for me. I'm not sure why I initially learned it. Maybe it was 5-10 years ago. But what I found was whenever I was talking to the airlines, and you're doing with like some confirmation number or you're doing an online order, you're trying to get some customer support, and you're trying to explain your email address to somebody. It feels like it'd be like chocolate for and you're just searching for the name. It just wasn't that efficient. And what I found was by knowing the phonetic alphabet, it adds a layer of efficiency and takes stress out of your life. So, for example, when you are in these situations, customer support, banks, whatever it would be, and they need a letter to know that. So that's why we do it, is to create, it's essentially just a tool that you can use for the rest of your life. I recommend people do learn the phonetic alphabet. Okay.
So I think this interview is about you, but I think you're going to like one thing that I have at our company.
Love it. I'm all ears.
Because the phonetic thing is awesome. The thing that I say is no pronouns. So there are so many miscommunications at our company, or there have been, where you're like saying, he said this, or they are going to be there. Oh, I like how that looks. And they're referring to something. So we had one day we had an argument about something on a page, and we're talking about two different things. And so instead of saying that, say, I like how the black line transcends this.
Cool.
Or instead of he, and no pronouns, I learned from Dan Gilbert, the owner of the Rocket Mortgage and Cavaliers. He used to go crazy on me. So I would like we'd text, and he'd be like, I don't know what you're talking about, because he'd get other texts in the middle, and I would still.
So no pronouns is what's the rule?
Yeah. I mean, you're going to use pronouns sometimes, but you're going to, you get what I'm saying. You know what I mean?
I love that. That's a call to excellence. And it is, I could see it being a lot of fun. You could even like reward people when they don't have mistakes, or penalize people when they do. You could gamify it.
See, that is cool. That's cool. I like your $50. That's cool, because we still have those communication things. Gamify it, reward them, and that's. Do you really give $50 to people learning the phonetic alphabet, or is that a joke?
Oh yeah, rewards are really important for us and our culture, and they can be small, they can be large. But if we ever have any sort of something like that, we have a basketball hoop back when we used to be in the office, and if people would hit a shot, you'd say, I'll pay you $50, let's say, to make that basketball shot. It's always important for us to, if we say we're going to pay something, we always got to pay it $1. We do it every week. We have we call it a town hall. It's on Thursday at noon. And there's always a game where people can, even in the world of Zoom, there's a game where people can win some money, and they're always paid out.
Got it. Okay. And guys, if you're coming in now, we have Gene Munster, managing director of Loup Ventures, was at Piper Jaffray, was the bull on Tesla, Apple, very, very early. We're going to get to a few stocks and his newsletters very shortly. One of the questions I got earlier is why walk away from Piper to go into venture capital?
Hard decision because I loved Piper, great people. The reason was it was an opportunity to move from being a spectator to somebody who's actively in as a participant. That was important, and we saw this next wave coming, and we're seeing it all today around automation and electrification, and we left at the end of 2016. And so that was part of it. We thought, mobile had been the last kind of wave. There's a new wave, AI powering that too. AR, VR was these big waves coming. So that was one thing. And the second is just the team. And Andrew and Doug, the other two co-founders of Loup, we worked together for almost 10 years at Piper. And they were as solid as the day is long. And I knew if I ever wanted to start something, this is my window, because I'm not going to have a massive opportunity, a wave to invest in. I'm not going to have the same people that I trust and know that they're smarter than I am on the team. And but it was hard because you're giving up a lot. Is important for me not to take a salary. Like, just as an example, I've made a lot of money in my life. I've given money away. I've given money to my uncle. And when you put all that together, I don't have enough money to be comfortable with. And so I still have to make money, as we all do. Most of us have to do. And not getting paid a salary for 4 years it's hard. There's a burden there. And that's been something that, anytime I think about it, I'm just reminded that I'm working well for our investors, the 100 investors that supported us in doing Loup, our first fund. But as I thought about doing Loup and leaving Piper, that's a big step down. Equity analysts are well compensated. And going from that to what I've been over the last 4 years is a very different, it changes your view on life.
So are you taking a salary now?
I'm not taking a salary now. I'll start taking a salary when we get Fund 2, as we start to get Fund 2 going. When we get Fund 2 going, which is going to be shortly, I suspect my salary will be initially, right out of the gate, extremely small, and as we perform, move up from there.
What was Fund 1, like the approximate size? Can you say? Or
25 million. Small is $25 million, and we want to invest in transformative techs. The initial investments are all done. Our goal is to make 35 investments, and we made 35 investments. And we're just basically doing follow-ons right now.
What are some standout ones, or a few that we could talk about?
A couple. There's a lot of them. It's a hard question, but some of the standouts, that is an easy question. I think a company like Levels, which is taking something that is commonplace, which is it's a patch that you put on. It's an extremely small needle in this patch, but it is used by diabetics to monitor their blood glucose levels. And you wear this patch for a few days, and then you activate their app, which uses AI to best understand how different foods impact how your body processes those foods. And the idea isn't just to feel good. Like, we talk about being like not sick, for example. I have the flu, I don't have the flu, kind of a thing. But the idea of feeling as good as you possibly can, and Levels does that because essentially it can help you script your ideal diet. So that's one that's we're excited about. Another one's called Dash, and we like crazy ideas. Before I say this, the basic idea is, in the future of logistics, you're going to be landing aircraft to get cargo off it, but you can just throw the stuff out the window, and it can go down to gravitate to an airfield. And they have a system to do that because landing a plane, taking it off again, adds danger, and it adds expense to it. This is most important in areas where it's a little more rugged, kind of rural areas, for example, Alaska, different islands, the Bahamas, things like that. Is these there's a big logistics problem, and we think Dash is going to help solve it. So those are a couple. I apologize to the 33 companies that we're invested in.
I know I know, and there's so many good ones. And the question I asked, I know you're in a lot of great ones, so no, yeah.
No harm, no foul with those our other ones. We love you all.
Now Spencer Israel wanted to know about Masterworks. He said he wanted.
Yeah,
to know
I was remiss. Masterworks, yeah. I mean,
you want to know if you bought any painting or anything on it, or if not, but what's Masterworks? Everyday investors buy shares of artwork such as Andy Warhol.
Yeah, this is big. I apologize to Masterworks because this is right at the top of the list too. It's really exciting. Essentially, what they're doing is making blue chip artists that even people like Gene Munster would have heard of, Picasso, investable. And so they acquire the asset, they acquire the artwork, and then they make fractional. You can basically buy shares in that. And the art market has done really well over the last 30 years. It is it's really defensive, surprisingly. When things get tough, it has inverse correlations to the market. You would think that if the equity markets blew up, then the high-end art market blows up. It turns out that people who invest in high-end art actually have so much money that they don't care if the markets blow up. Their lifestyles aren't going to change. They don't go and sell their Picasso to make sure that they're able to pay their rent. And so we were just attracted to that asset class. The founder, Scotland, this guy is an assassin, next level, founded a lot of successful companies, and he's just really passionate about art. He's one of the biggest art collectors in the US. And this company's going places. They're going to make art an investable asset class for everybody. I'm really excited about it.
And it's a private company right now, correct?
Private company right now. That's correct.
Okay.
You can buy shares on there. You can trade your shares out of it. It's just it's fun because it's a good asset. I mean, you think about what's going on with like baseball cards right now and collector cars, and I mean, all of those. I don't know if you spent much time, Raz, on looking at those, but they're all up and to the right. So Masterworks kind of, to me, it's like the best of those asset classes, those other asset classes. And not only that, but they have a platform where you can trade your shares on it. It's just making it easy for everybody.
No, it's amazing. I mean, I'm an investor like in StockX, but that's a little different, but there's collectibles type stuff there too. So they have cards and stuff. It's a crazy industry. So we're going to do like a rapid fire in a second. Yeah, guys in the chat, I see the questions. Those are private companies, and we're going to get to public. We're going to switch because we only have like 8 or 9 more minutes. Tesla, they want to know Tesla, and then they want to know if you have any opinions on NIO. So what are your thoughts on Tesla? Is the best still ahead? And NIO, and guys, just so you know, Gene has been a bull on Tesla. He's not a come to lately. He was in our office 3 years ago when Tesla was getting as much shit from anyone, and Gene was super bullish on it. And I had to meet with one of my Tesla guys, and yeah. And by the way, guys, Gene doesn't take positions in a lot of these companies. He's an analyst and gives you all the research. So he's not biased by this stuff. Yeah. I mean, he's biased by his thought complex. I want you guys to realize that. In Apple, he probably could have made $20 million investing in Apple when he discovered it. Instead, he values the research to give to you guys. That's the truth.
Appreciate that. And, you know, over time, we will be making, because we are an investment firm, we will be making investments in companies. I recognize that we're going to lose some of credibility because of that, but I promise everyone that I'm going to be level-headed, say the bad is good. But there's more on that to come. But as far as Tesla is concerned, the near term, I would say the next year, I would not. If you have a 1-year time horizon, I would not participate in ownership of Tesla. If you have the luxury of owning something more than a year, I absolutely would own this. And the reason why I make that distinction is that the markets are very finicky in terms of transformative tech, and it always takes longer than we think. And there's some data points around EV adoption that would kind of support that. Tesla's delivery numbers have been impressive, but there's still a lot that has to happen for EVs to become mainstream, and Tesla's market cap is higher today than it was 3 years ago. And so what all that means is I think it is extremely dangerous to trade around this. It could be up 30% in a month or down 30%. I think if you take the approach of where Tesla can go, going beyond just EVs, but to energy capture and storage, they have that small energy business today, 7% of revenue. They can get into autonomy, robo-taxis. I believe that they're going to be a player there. And then they can get in other kind of side markets like insurance or even HVAC. It sounds bizarre, but really nothing has happened. And the reason is that they've got a great brand, and they have brand permission for people to start to sell other products that they've used and pioneered in making cars. HVAC is a great example of it. They've learned about HVAC through a car. Now they can come out with an HVAC system. Batteries, they learned them in the car. Now they have a battery for your home. That's why I think Tesla ultimately can be a much bigger company.
Yep. And my lease is over now, and I have to figure out, now they updated the Model S and Model X, and now I'm at
got it. Raz, it's just, they're calling your name. I can hear it.
Well, I thought I was going to get the Model Y because that was like what they had as a new interior, but then they come out with the Model S and Model X, and my kids find out about it. And I don't know if you know, they have a whole video screen in the back now. So it's another 500 more, you know the story. So
it's a beautiful car.
Yeah. Oh, I have to get a Tesla. It's, I invest in the stock. Now, do you follow this Lucid Motors and CCIV, or if that deal's happening?
We do. Yeah. I would just say, I'm going to pause on that and some of the other ones, in part because at least we haven't done as much work on it. And, that is the thing. You talk about the thing behind the thing. I mean, these are the thing. Lucid Motors is the thing. I think Tesla, Apple, Google, maybe NIO in China, I think those are all going to crush. I think traditional autos in a tight spot. And I think there are going to be many companies that are going to be, the thing behind the thing, the arms supplier, that are going to do well, really capitalizing on what will be a very different looking transportation world a decade from now.
Wow. NIO, and that's interesting. And I love you using the thing behind the thing. That was good. And so Lucid, you haven't done much research on that one. Now,
yeah.
This one I don't think you follow, but this guy keeps asking, so I'm just going to go with it. Airbnb?
We do. We did some work on it. I'm a believer in Airbnb. Just, just my opinion is positive on it, in part because I think about parts of our world that are forever changed with the pandemic. And I think that business travel is forever changed. I think that how people travel, and I think that what Airbnb is doing, asset light model around unique experiences, I think is going to be more valuable. And that's what they're doing. Yeah,
I agree. Airbnb is one I missed, like way back in the day when I had a chance. All right, so now I have a couple more. These are some good ones. So Mitch Hotch, he keeps asking. Mitch Hotch works at Benzinga. So Mitch, I'll ask it. He wants to know how you pick stocks. He says, do you focus more on the technology behind it, or is it the fundamentals?
We start with identifying disruptive markets that are ripe for disruption, and then we basically divide and conquer amongst companies within that. And so it starts with a learning that I had, which over the years, which is great markets can heal many wounds. And it can be management mistakes, it can be product mistakes, but when you're in a market that is what we'd refer to as an undeniable truth, an undeniable growth truth, then, and I mean, we can, don't want to talk a lot about the markets that there's more to come, but I would just say is just kind of block off an hour, turn off your phone, and just think about how our world is going to change. They're pretty obvious. A handful of them are pretty obvious, and that's where we start. Got it.
Okay. That's interesting. So that makes a lot of sense. Now, Apple has more than $200 billion in cash on hand, more than any other company in the world. What do you expect them to do with all this money? I think they should have bought Tesla a long time ago, but what do you think they should do with all this money, man?
I think a lot of it's going to come back to investors, that they will do some form of acquisitions. I think a lot of it's going to be on the component side. It looks more clear. I'm not saying this is definitive, but Apple wants to do a car. It doesn't mean that they're going to have a car in the market. But I think they could be acquiring technologies along those chains. I don't know, they're not going to acquire Tesla. They're not going to acquire some, I don't think they're going to acquire a big like content brand, for example. So that is, and a lot of it's going to go back to shareholders. It is, they have a net cash position of closer to 80 billion because they've got some debt. Okay. And they've said that they want to get that to zero over time. They haven't given it time. So there's still a lot of money that's going to come back to investors, mostly through buybacks.
Okay. All right. Got it. Mostly products. Okay. Now Gene has a great newsletter, guys. Who writes this newsletter, Gene?
The actual letter is put together by one of the Loup founding partners, Andrew Murphy. The content is everybody. There's different pieces within it, and different people have different. So it's kind of written by a combination of people, kind of all brought together. Andrew, and then Andrew works closely with Christine Pastor, and those two put the newsletter together.
Okay. So this week's newsletter, The Contrarian Mindset. Will you just give a quick thing on that?
Yeah, it was written by Doug. I highly recommend. If you haven't heard of Doug's name before, mark the moment. You're going to hear a lot about Doug Clinton in the next 20 years. He is, as I said, I've worked with him for 10 years, the smartest person that I know. And he wrote this, and the basic idea is that to be successful, you need to be a contrarian at its most core. And he kind of walks through what the mindset of getting into a contrarian mindset is. And it's hard to be contrarian, obviously, but that's what Doug's talking about.
All right. And the next one was the next GameStop. Do you know what I'm talking? Did you read this or no?
Yeah, I did. Another great one by Doug, the next GameStop. He's basically framing in which asset classes could have this next kind of surprising moment. And the punchline, I hope I'm doing this justice, Doug, is silver is one potential. Again, it's not a recommendation per se; it's an opinion. But the idea of there's going to be other game. This isn't going to blow over overnight. And the other concept too about the next GameStop is the retail investor is emboldened, and they're going to be. I think this is, it will cool from its GameStop levels, but it's still going to be a force in the market that is something that more traditional institutional investors haven't dealt with.
Okay. All right. We got one or two more questions, but do you follow Snow or Palantir at all?
I don't. Luke does, but I don't.
Okay.
Is the answer.
All right. And so there was Tesla. Can they keep up with Deliveries? Was that your take on this? Was it in your newsletter?
Yeah. I made a mistake at the beginning of the year when I looked at their growth numbers, thinking that they may have a hard time getting to the streets, 775 or 80,000 delivery estimate for 2021. I didn't know that they had the capacity on hand with Shanghai and Fremont, their existing factories, to do that. They do have that capacity. They can do over 1 million cars. And so Tesla's got, it's hard to build cars, but they do have capacity on hand to meet the street numbers.
Okay.
Need them.
All right. So to wrap it, we have to one or two questions. You're going to have another fund. You're going to invest in assets, which I think is smart because you're putting your money on the line. I don't think that's a bad thing. Any biggest lessons you've learned since Loup, like since starting Loup, your biggest lessons?
I think the biggest lesson is a mindset of, and people say this all the time, but you're living it too. I'm sure, Raz, as you're building what you're building, a mindset of just, when things kind of catch you the wrong way, just to let them go and move on. I think that has been really helpful. And really what that kind of comes down to is it allows you to focus on what is really important. I think back to 5 years ago, the things that would, catch my attention. And it's very different today, like a really sad part. And all respect to love professional sports, but like that's an example. I'm grew up in Minnesota. I'm a Packers fan because it's a team that is like their commitment to excellence is incredible. But just the concept of like getting uptight about sports, it's just all that is. It just kind of goes away for better or worse. But what's the takeaway is think about a superpower of letting when you get frustrated on things, just imagine they just kind of go away and just move on.
No, Gene, when I get anxiety, Benzinga, a few years ago when we had some changeover, whatever, someone once said to me, "This too shall pass." And it's really hard in the thing. And I know what you're saying, what you just said, a superpower. That's interesting. I like that way to think about it too.
Nice.
Yeah. So the last question is, what was your worst or first job? Worst or first job, or you can give both if you have it.
Worst job I did for one day. It was I was doing, because this is before I got into lawn mowing. I said I started that when I was 13. I worked on a construction crew for one day, and it was there were people who poured concrete, and you put up these I don't know, these like rods would be in the concrete, and then they had these like things that you'd have to tie the rods to. Is like this mesh that you'd put up. And I have a fear of heights, and I was up on a high ladder all day long. It lasted one day.
Okay, that's yeah, me too. I get scared going on bridges, man. I get scared going on those bridges. Like when I go to a hotel and they want to, like, you know, be nice, we throw events at a thing, and they want to put me like the top floor. I say in the Marriott Bonvoy, I'm like low floor.
Low floor, yeah.
I get scared of the balconies, you know, like I'm looking down, going on the balcony.
Looking over a bridge. If you'd tell me, I went to the Hoover Dam recently, and I guess over a year now, but I remember looking out over the edge there, and that was not a good experience for me.
Oh my God, I can't imagine. All right, well, I know you have your next 3 o'clock call. People want you to come on again. Next time we'll get more into business and how he looks at these innovative technology companies. And I want to talk about more of your startups, because he's invested in some very cool ones that you guys are like probably never heard of, that will be the next frontier of tech. That will be. And if you get a chance, go to Loup Ventures and check them out yourself. So, Gene, thank you for coming.
Yeah, I appreciate it very much. Enjoyed it. We'll see you soon.
Yep. Thank you very much. Have a great day, man.
Bye.